Thanks very much. And hello, everyone. My name is John Hutchinson. Welcome to our little presentation called the 5K Income Challenge, where two traders try to prove that they can make $5,000 per week trading options. My name is, as I said, John Hutchinson. I am the publisher of TradeOutLoud. I'm the one on the left in the picture. I'll be your host in this presentation. And I'd like to take a quick moment to say thank you to David and his team for inviting us to talk to you today and to allow us to share the details of something that's pretty exciting. And if you're not familiar with Traders Reserve, we've been helping options traders execute income generating strategies selling options since 2010. You can learn more about us at TradeOutLoud.com. And the project that we've been working on is something, like I said, we call this the 5K Income Challenge. And we've been working on this for a little over 2 years. The goal of this idea was to average, or is to average $5,000 per week net income, selling options, not buying options, not speculating, but selling options, creating a $100,000 portfolio. For the purposes of this presentation, you do not need to have a $100,000 portfolio. You will see, in fact, portfolios ranging from $10,000 to $50,000 to $100,000, which means there will be something for everyone to take away from this presentation. And that's especially true if you are finding it difficult in the current market or in the current market environment to get results. If you're frustrated because it's one day up, one day down, 1 week up, 1 week down, if you're frustrated because no matter what you're trying to do, accomplish what you've learned, and you're trying to put it into action, you're not getting any success. You're not achieving the goals that you've set for yourself as an options trader. But frankly, if you're stuck because you keep running into roadblocks or obstacles in the trading process, in your trading day, and your trading plan, or if you're a person with really big ideas, big dreams, whether it was a second home, vacation home, world travel, putting the kids through college, even early retirement, but you're finding it difficult to make those dreams come true, or if you just if you're courageous enough to think about, could I retire tomorrow? What we're going to share in this presentation can help you, all of you. And what we're going to be doing is, as I said, working through a 2-year case study. And I'm going to go through several key aspects of this case study because it's actually the pieces and the parts of it which will be important to you. And these are parts that can help you. This case study is 100% about results. And when I say results, I mean real money results, not one-off trades or individual trading tactics. So I'd like to begin with the 4 most important factors which we've identified. We'll call them 4 breakthroughs to achieve or reach this concept of the 5K Income Challenge. And the number 1 breakthrough is scale. Scale is very similar to the idea of growing a business and relates to trading because trading is in its own way a business. What you'll see in this case study is how we learned up, meaning how we started small, scaled our capital commitment to increase the income we were generating from our trading processes. And the one thing that I hope that you can take away from this presentation is the idea that the scale is what can help you maximize results. And in part, a new idea for us, which is concentrating capital in fewer positions, which can lead to outsized income results. When I go through some of my slides and charts a little bit later on, you will see that happen. You'll also see, when I share some of the later slides, individual position examples, which helps you to see it scaling in a different way. But this was one of the biggest breakthroughs because it solved the problem that we kept running into, which was the limitation of income from options trades, especially at smaller portfolio levels, which helped lead to the second breakthrough, which was this idea of expanding tactics. Now, in all of the case study data that I'll be sharing with you here, we did not rely on 1 or 2 single tactics to get results. We've used more than 15 different options tactics over the last 2 years. We've used a range of tactics across a number of sector index ETFs, across stocks. Sometimes we've used this different tactics on the same position to get results. And depending upon the directional bias of the market, we could conform those tactics to take what the market was giving us, right? Basically playing the hand that was dealt to us, which this year is a bearish hand, right? It's a full house of bears. So as a trader, and sharing the experience that we have had, one of the hardest things to do is adjust the tactics to the market that you are being handed as a trader. And that means that one of the things that we want to do is be able to leverage multiple tactics so that we always have a way to generate income regardless of the direction of the market, or independent of the direction of the market, or by trading with the market when it is directional. The third, and this was for me one of the most important breakthroughs, is what we call aggressive trade management. Now, aggressive trade management does not mean day trading. It doesn't mean intra-day trading either. It means to continuously open, close, adjust, or reset trading positions from day to day or week to week. And that's what we did throughout this 2-year case study. And I'll show you a timeline here in just a moment. But the aggressiveness is also one reason that we were able to achieve the results we'll share here, which leads me to the fourth most important factor, which is capital allocation. Which is, for our purposes, capital allocation is increasing or decreasing the position size as the portfolio value rises or falls. So whether you're taking profits or losses, adjusting position sizes based on the value of your portfolio. Something that we've discovered many traders either don't do or don't know how to do or aren't well schooled in. They tend to say whatever their portfolio value is, I'm always going to put on $500 or 2% or trade 2 or 5 or 10 contracts. And then as they get results, they don't make changes to their position sizes. So as your account slowly grows, that actually limits your results, especially obviously on successful trades. So although they aren't with me today, because 3 people on a webinar is 2 people too many, the 2 traders that I mentioned are my partner and co-founder at Traders Reserve, David Durham, and one of our trading experts, Chris Davis. Dave has over 40 years experience and expertise in the financial industry. And Chris, who is, as I said, our trading expert, he's a former member of one of our trading services. But he was taking a completely different approach in that trading service and sending us emails every week, every month about the results that he was getting with what he was doing, that was different. And after several months of this, we finally asked him to show us what he was doing. That process is the backstory. It's the genesis of how we arrived where we are here at this idea of making $5,000 per week. It comes from what Chris was doing and the combination of Dave and Chris putting together an overall option strategy to accomplish that goal. So what you're seeing is this evolution of how we came to the idea of generating 5K per week trading options. When they first brought this idea to me, I said what anybody would say, which is prove it, right? $5,000 per week? Prove it to me. But I added a caveat. I said, I want you to prove it using real money. Don't prove it based on back testing or theory or fake trades or paper accounts. Put up real money and prove that you can actually do it. Which is why what you're going to see are actual money results from several trading accounts throughout this 2-year period. Before we get to those results though, I told you that this is a culmination of a case study covering 2 years. I want to go back to the beginning because it's this evolution process that I think you'll find kind of exciting. And because where we ended, this idea of generating $5,000 per week, is not where we began. We actually began with the question of how could you use options to rapidly grow a small account? And in this case, a small account was $10,000. And in the background on this timeline, which we'll repeat throughout this presentation, you can see the S&P 500 aligned with the timeline. So that's the actual movement of the S&P 500 over the last 2 years throughout this timeline process that we have been through. And every time that we've taken a step in this process, the market has gone down. So the next time that you want to know when a bear market is coming, or when it's time to short stocks, or if the market's going to fall, just give us a call and ask us if we have a beta test in progress, because if we do, the market will probably go down. Now, let's start with the March 2020, right? Onset of the pandemic, market falls off the shelf, good time to start a test. That was the setup process, meaning that's where we went into this theory, the question of how could you grow a $10,000 account, and to run some test trades, just internal one-off trades, to see if it was even possible. Could you actually or reasonably trade in an account that small? And in the first few months here, it was not our intent to try to say, well, let's grow the $10,000. It was, can you even make trades with $10,000? Because those of you who are experienced know that at $10,000, single-sided options are an impossibility, right? Not possible, not part of the equation here. What we did use, however, were spreads and variations of spreads. As I said, over 15 different options tactics in total over the full 2 years. And we use those obviously because they decreased the margin or capital required to enter trades and still had a substantial profit potential at the back end or at the close of the trade. Once we discovered that, yep, we could trade at this account level, we decided to execute a series of workshops around this idea. That's at the beta 1 between June and October, and actually started those workshops in October. And from October 2020 through January 2021, we ran 3 separate workshops, each of the workshop running about 4 to 5 weeks, comprised of traders just like yourselves. And we brought them in so that they could make trades with us at this account level and help us validate everything from the trading process, trading execution, even the trading results. And our objective in each of these workshops was to open trades to each week. So we might add 1 or 2 trades each week, but to be able to close all of our trades by the time the workshop ended 4 or 5 weeks later. Across all 3 of those workshops, we made a total of 45 trades, 15 trades per workshop, with 38 wins, 7 losses, an 84% win rate over the full spectrum of the time from October to January, and generating average gains per workshop of about $2,200 on that $10,000 account. But going back to the idea of scale, and this is just a linear addition. So this is not putting capital back to work, but this is linear addition. We generated a 67% return, growing that $10,000 to over $16,000. And on an annualized basis, that 67% projects out to a 201% annualized return. Now, again, like I said, linear projection, that means there are 3 17-week periods in a 52-week year. This is roughly the period of time that we were trading these workshops over 17 weeks. So that 3 times 17 is 51 weeks. We'll give you a week vacation. And 3 times 67 is 201. That's how we arrived at that annualized return projection. Needless to say, getting these kinds of results at a small account level was pretty exciting. They were a little bit stunning. We were not expecting to be able to generate over $2,000 in a 4 to 5 week period, but it validated the approach. It said that the process, the tactics, the approach that we were using worked. But we also traded at the same time a micro account. This was a $3,500 orphan IRA, which we traded through the same workshops. Obviously, the cash income produced was smaller than the $10,000 level, but we also continued trading it a couple of months beyond the end of the workshop period with the 10K account through May of 2021, excuse me. And what we found was the results at even a $3,500 level were consistent with the $10,000 level. And we, as I said, we extended this out, so we had an absolute return of 93% in 6 months, which would be 187% annualized. And I will keep bringing up the annualized numbers because you will see, and I want you to see, the consistency in these numbers. I realize that they are outsized. I realize that they are spectacularly high, but when you see them across a variety of portfolio levels, it helps you to see what's possible. Can't guarantee it to you, but it's possible. So once we had proven this idea of even a $3,500 and a $10,000 account, we arrived at a natural and somewhat obvious next question, which is, what happens if we increase the account size to $50,000? Would the results be the same? Would they be different? Would the tactics, the timing, the execution all be the same? So in early 2021, we started an execution plan to lay out the trading plan, the trading process for a $50,000 account, and deployed that account at the end of July of 2021. Then over the next 10 months, which brings us around to May of this year, we've done this with a $50,000 account. That's a 105% return on capital. That's the actual return on capital. So we've literally doubled a $50,000 portfolio in that time frame. Over the 10 months, we made a total of 57 trades. 49 of them were winners or successful income trades. 8 were losers, with a total win rate there of 86%. Remember, from the previous workshop series, our win rate was 84%. What that validated for us was the success of the range of tactics we were employing, that the tactics themselves were working. Over this 10-month period, we've also just found that we were averaging about $5,240 per month in cash income, which meant if you can do $5,200 a month, what's the next obvious question? Can you do $5,000 in a week, right? You can see this evolution that I'm talking about, how we started. It was a small account, scale up the small account, and then speed up the time to get results. So in this part here, this is the culmination of that acceleration in scale, in tactics, and in results. At this time, we were still trading the $10,000 portfolio. We sort of started over so that we were working side by side and in concert with one another. This is the growth rate of the $10,000 underlaid with the $50,000 portfolio. The $10,000 account had a total return a little above 97%. Did not exactly match the $50,000 returns simply because there were trades that were executed where the margin or the capital required was not possible or realistic for a $10,000 account. So, for example, we had trade requirements or capital requirements, which were ranged from $2,800 to $4,600 for one contract. You can't trade that in a $10,000 account. I mean, you could, but you wouldn't. So that's why the results are a little bit different here. It was a difference of 8 trades. So, statistically speaking, not a significant difference, but there is a small difference, and I felt you should know why that is. But one of the biggest lessons that we took from this is this idea of scaling as you grow. And I talked just a little bit ago about position sizing. So let me show you scaling in that different way from a position sizing perspective. And notice here that the position size that we traded at the $50,000 level, how it grew over time. And we started with an average position size of $4,000, meaning if a trade's margin cost or trade capital requirement was $400, then we could sell 10 contracts maximum. The capital here represents that maximum capital to trade, and that obviously then determines the number of contracts or how many contracts that we could sell. But look at the shift over time in the number of average contracts traded. From August through December, we traded an average of 8 contracts per trade. But beginning in January and through the April-May period, that increased by 50% to nearly 12 contracts traded. That is the reason that the results became exponential, because we increased our position size as the portfolio grew. And for both accounts, that's the reason that we were able to get substantial returns in roughly a 10-month period so far. But this analysis, looking at position sizes, looking at the rapid growth of these portfolios, led us right back to this question toward the idea of generating $5,000 per week. Because one of the things that we noticed was the most frequently traded tickers, which were index or sector-based ETFs, had consistent income results at one contract levels. Those income results ranged from $113 to $229 per contract. This is on an average traded basis, meaning if you traded the SPX 10 times, the average weekly income at one contract was $200. So when we looked at that average and added it up over multiple months, the total potential income was $954. So much like we scaled from $10,000 to $50,000, we asked the next logical question. What happens if we scale the contracts from 1 to 5? And you can see that the result, 44,770, is right on the cusp of $5,000 per week. But the really interesting part for us was scaling from one contract to 5 did not scale the capital requirement by a factor of 5, meaning we didn't have to go from $50,000 to $250,000. We only had to increase our portfolio from $50,000 to $100,000. And that's how we ended up at this point of asking the question, could we get $5,000 cash income per week trading a $100,000 portfolio? Last year in September is when we began this process. Again, creating a trading plan, creating a trading process. And in November of 2021, we began a beta test. We took $100,000 in real money and put it in a traditional IRA to expand our trading in that new portfolio. So we put $100,000 real money, traditional IRA, started trading it using everything that we've learned to date from the beginning of this process all the way up through November of last year. So I'm going to walk you through the first beta test results, and then I'm going to come back and do this again with the alpha group, which is at the far right end of the timeline here, trading the same concept. So first up, the beta test results. This is from November last year to March of this year. Net income of $70,348 on average traded capital on a weekly basis of just over $92,000. The value of the master portfolio started at $100,000. At the end of the beta test, it was over $161,000. Bear in mind that because our average capital was less than $100,000, your actual addition here is net income plus average capital traded minus expenses. But that return was a 75.7% return on capital, period, roughly 17 weeks. So an annualized rate of return potentially of 227%. That means that we would triple the portfolio value at that rate of return. Again, shocking, I know, but exciting because now we've seen this process through multiple portfolio levels, and we were getting the same kinds of results, the same return on capital results, the same annualized return results, not exactly the same, but there's not a substantial difference between 200 and 227% just from a percentage perspective. But for our proving purposes here in this presentation, let me show you the actual screen grab, if you will, from TD Ameritrade of the traditional IRA. You can see the growth long-term from November through this year up to $150,000 got cut off. But this is during the beta test. And one of the things that I want to draw your attention to, one of the things that we did experience were pretty wide swings in portfolio value. And you can see that from the beginning of January when the markets began to roll over. Remember I talked about aggressive trade management? You are seeing from January through mid-February the result of aggressive trade management. Position after position that was at risk in early January due to the market falling off the cliff, having to be adjusted, reset, changing the expirations. So we kept pushing things further and further out until we had a more stable market. And then the portfolio rising consistently from middle to third week in January through the end of the beta test to, again, as I said, over $160,000. It's important to recognize that if you're going to take this kind of a path, to be a bit more aggressive. Remember, we're not betting the farm on an individual trade. We're using income generating strategies with options that are, everyone knows about, but it's the aggressiveness of the trade management that defends a trade, protects a trade, and allows a trade time to do what it's supposed to do, which is generate income. But you need to be prepared for this kind of trading can lead to wider swings in portfolio value. For us in this particular beta test, those swings were anywhere from $10,000 to $15,000 in a week or over a couple of weeks. And the swings the other way were also true. We could also swing back plus $10,000 or plus $15,000. But over the longer period of time, this will sort of smooth itself out. Just get a sense of that from the chart there. Part of that's because we discovered our profit was so consolidated in a small group of tickers that we were trading. Let's take a look at them. We traded 12 individual tickers during this first beta test. And you can see that the majority of our profits were actually in the SPY and the FPX. And one of the things that we had to do in January is change direction with the market. Meaning, if we had trades that were to the bullish side, we had to shift to neutral to bearish on the SPY and the SPX. And you could see that the majority of the profits, more than half the profits generated in the first beta test, were in those two tickers. Another third of that profit came from the SMH, which is the semiconductor sector ETF, and the XOP and the OIH, which are oil sector ETFs. And you can also see we had a couple of positions that didn't work out. We had a really difficult time trading the Qs, so we lost money on the Qs. That's the point at which the NASDAQ rolled over more than the Dow and the S&P did. So we stopped trading it. And instead, we concentrated our capital and our trading on the positions which are outperforming at the time. And by the end of March, when all of this was done, we took a step back. We said, we really like these tickers, but there are others that we can trade. But we needed to go through a process of validating again whether other people could trade the same way, get same or similar results. So in April of this year, we stopped our first beta test. We took a week off, a week's vacation. And in April, we started up our alpha group. We accepted 25 people in to test this with us. And as you can see on the chart in the background, perfect market timing. But let's take a look at the results. We're still trading with the alpha group right now. We just finished, I think we have results through week 10. We still have 3 more weeks to go with the alpha group. So the results that I'm showing you are 10 weeks, not 17 weeks like the original first beta test. But to date, in those 10 weeks, we've generated $33,000 in net income. Our average trading capital right now is $84,000. You'll notice that that's lower than what we were trading in the previous beta test. Master portfolio right now, it's not necessarily the end, but currently would be 133,344. Return on capital of 35.9% in the 10-week period, which is an annualized rate of return of 197%. So again, triple-digit annualized return. On a position basis, though, watch this shift. Notice now that the SMH is our top position. The SPX has been okay, nothing wrong with that, it's making money. We found it next to impossible to trade the SPY, so we didn't. But the OIH and the Russell have been 2 of our worst positions, and yet we're still positive by 35% in 10 weeks. Still making money. The XBI, that's the biotech sector ETF, has been our second best position. We have not performed well in the IWM, the diamonds, XLK. So we stopped trading several of these. The Qs have been very difficult to trade, even though they've been directionally negative. Being able to get in and out of those trades profitably proved not easy. So we didn't trade them, quite simply. So again, this idea of tactics with positions, scaling results is what we've been putting in play. And as I showed you the results here again, 33,000, not as good as the first beta test, 10 weeks in, a much more difficult market between April and May and into June. I can't tell you how many times we've seen Friday sell-offs that have upset some of our results. But combined over the 7 months, you now see 2 tests for this idea of generating 5K per week. And the total income, 103,692, 103% return. Now, we're not at our goal of hitting $5,000 a week. If you do the math, 103,000 divided by roughly 27 weeks is $3,700 to $3,800 a week. It's still 103% return in 7 months though, right? So what we're discovering is this current period has been so volatile, and it's led to us having to change some of the ways that we trade temporarily until we get more stability in the market. That's an example of trading what the market gives you. So in the current period, the results aren't matching up what we did in the beta test, but there's still strong positives. And the annualized return, again, not that significantly different. I mean, it's 30% different, but if you're doing 190 to 200%, I don't think anyone's going to be unhappy about that. So I'd also like to share with you now a second real money account. I told you that there were several, so you've seen 3 so far. What I've done here, though, is a little bit different. I put markers to show you, based on the timeline that I've been sharing with you, where results were coming from. So number 1, in March of 2020 is where we began testing the theory of trading a small account. So this is Chris Davis's, one of the experts. This is his total account. And at the number 1, he started trading a subset of his capital at $10,000. At number 2 is where we began the actual trading workshops that I discussed with you at $10,000 account level. Number 3 is where we began trading the $50,000 portfolio in late July. So again, you can see this rapid run up between number 3 and 4. And number 4 is, that's the point at which we began the beta test in the 5K challenge. So at the point of number 4, Chris transferred all of his trading activity to be consistent with the 5K income challenge. I highlighted number 5 for you because he took a $30,000 distribution to pay for his daughter's college tuition. So that's that straight line down that you see there. But if you, inclusive of that $30,000 from number 3 through number 5, number 4 through number 5, excuse me, the full beta test, over $110,000 gained since he began the 5K income challenge in his account, a realized return throughout this entire period of over 370% since March of 2020. So that's real income, or real growth from $50,000 to over $200,000 in just over 2 years through the 2-year timeline. And I think that was all I had for that one, right? That was. So if we put all of the test results together and look at them collectively, you can see accounts ranging from $3,500 to $100,000. So like I said earlier, for people with smaller accounts, there's something here for you too. There's an opportunity for you as well. And you see time periods listed anywhere from 17 weeks to 10 weeks, 6 months, and a range of annualized returns from 126 to 227, but an average annualized rate of return across all of these testing periods of 187%. And the purpose to doing this was, for us, was to prove whether you could or could not do something. The results have been shocking to us, in part because, as I said, we're collecting premium. We're not angling for speculative trades. So this idea of generating income at significantly higher annualized returns was a surprise. and a very pleasant one at that. But your takeaway should be, how can you replicate something like this, even if you do it at a small account level, to prove that you can or can't do it just like we did? And the consistency of these returns, as I pointed out, as I said earlier, that's why I've been highlighting them as we've gone along. At every account size and every time period, we've been very consistent in getting this range of returns. So I did not share individual tactics or individual trades, largely because, number one, there were too many for us to reasonably cover. It would have been over 200-300 trades to cover across this 2-year period. And as I said, we've used a range of tactics, but the results should show you that there's a path for you, and it should highlight what I said earlier about these 4 factors being the reason we achieved the results. The tactics and the trades helped, but the focus on these 4 factors is what drove the results for us across all of those different account levels. So again, scale, being willing to increase capital commitment to an individual position to increase the income that you generate. Tactics, going beyond a single tactic or a single set of tactics, broadening your horizon, or increasing the toolbox, I guess you would say, to ensure that you have more high probability, high profitability tactics at your disposal, which you can use on any number of trades, tickers, or stocks, ETFs or stocks, excuse me. But again, the last 2 bullets being the most important to us, the reason we achieve the results: active and aggressive trade management, constantly opening, closing, adjusting, resetting positions, and capital allocation and position sizing, concentrating capital in fewer positions, and growing your position size as your portfolio grows, or decreasing your position size if your portfolio falls. It's a smart money management process. Anyone can do it. But you saw the position size and how that led to exponential results just in the $50,000 portfolio level. That's what can happen for you if you can adopt those 4 most important factors. That, I think, really, the trade management, though, for me, still is the number one of the 4. So that's sort of an overview, a wrap up of our case study. A quick review: the idea of the 5K income challenge. The goal is to average $5,000 per week net income, selling options, trading a $100,000 portfolio. As I said, based on the 2 test periods that we've been through, we're 3,800. We've been as high in each period. We've been able to get pretty close. In the beta test period in November, we topped out at about $4,600 per week. In the current market environment, in the current alpha test, we haven't reached that level yet. So we're running $3,300, $3,400, $3,500 depending on the week. We've been as high as 5,000 in the first couple of weeks, but the last couple of weeks have been much more difficult. So got work to do for the next 2, 3, 4 weeks. We will be opening the 5K income challenge to new members in July. But before I get to that, a few quick points. As I said, if you're going to go this route, and you should, do expect volatile returns. They'll smooth out over time, but as I showed you, you can see and will see swings in portfolio value. Doesn't necessarily mean you're automatically losing money based on the types of trades that we're putting on. In some cases, it was simply the trade value decreasing, not necessarily indicative of a lost money trade. But this is active trading, often daily trades. That's what we're doing right now. We're not day trading, we're not scalping, we're not intraday trading, but we do frequently make the trades on a daily basis. But it has the potential, as you've seen, for a growth rate between 100 and 200% annualized. And right now we're averaging between $3,000 and $5,000 income per week, depending on the test period that I showed you. Who is this for? And a couple of extra steps, a couple of next steps that I'd like to share with you. This is not for inexperienced traders. This is for people who have experience. This is far beyond basic puts or calls in simply the construction of the trades. They're not complicated, but they are more complex than a basic put or a call. And we've also found that this is best for people who are self-sufficient executing trades, meaning we don't need to hold your hand. We can give you instructions and you can execute them. I said, you have to be able to handle the wide swings of portfolio value. This is built specifically for starting capital of $100,000. We do reset our portfolio to $100,000 each quarter. That means at the end of the quarter, we're taking our income off the table and starting over. Now that will change our long-term annualized rate of return, but what it also does is protect our income. So for somebody who wants to experience rapid income growth, whatever your account size now, and potentially join an exclusive group of traders who are using the strategy, I will share with you our little invitation today for the 5K Income Challenge training class. This will be, or is rather, a prerequisite to entering the 5K Income Challenge program. I'll explain that in just a moment. But what we are teaching in this class is the tactics that we use, the specific options tactics, and how we trade them. So everything that we've done over the last 2 years culminates in teaching you how we trade these individual tactics. We also teach the capital management and position sizing tactics that we use, the trade execution and the trade management process that we go through. That's that active trading management. We share with you the ETFs and stocks that we trade. You've seen many of them in this presentation. They're not a big secret. So that's why I shared them with you, to show you how some of those positions can produce outsized results. You'll also learn about something new called rapid scenario analysis. This is how we cycle through a variety of tactics to determine which one offers the highest probability and profitability before we make a trade. Plus, we'll share master portfolio results so you can see how our master portfolio is growing. And in our case, for those who want to take the next step into the challenge after the training class, you'll also be introduced to our trading app. The live training class is open to anybody. As I said, for people who have smaller accounts, everything we're teaching in this class can still relate to you because the tactics, the approaches that we use, that 3,500, 10,000, and 50,000 are the same or very similar to what we're doing at the $100,000 portfolio level. So there will be 2 different dates that we're holding the live training class. It'll be Wednesday, June 29th at 7 p.m. Eastern, and a follow-up presentation, same training class, just a follow-up, on Tuesday, July 5th at noon Eastern. A running time is about 90 minutes. It may be a little bit longer. There will certainly be time for Q&A inside of the training class. But as a 5K Income Challenge member, if this is something that you think you want to consider doing, this is your training program. And the reason I say that, the reason this is a prerequisite is because the 5K Income Challenge program that we're running right now with the Alpha Group and which we'll be adding to next month, we don't do live trading room. We don't do live trading webinars. It is fully and completely trade alert, trade recommendation driven. That is because of the speed at which we have to execute trades and the timing for those trades. We need to get those in your hands as a member immediately. So you need to know how to execute the trades based on the tactics we're using, the capital that we're using, the number of contracts, et cetera. That's what we're focusing on throughout the entirety of this training class, is how we trade the 5K Income Challenge way. So we're teaching you the way that you would be trading as a potential member in the 5K Income Challenge, which is why we've made it a prerequisite. We are taking 25 new members next month. So training class attendees will receive the first 25 invitations to join the 5K Income Challenge membership. Price here, $295. We've made this a simple decision for somebody who wants to go down this path and see not just how we grew those accounts so rapidly, but the individual tactics, the trading management processes, work with both experts. Dave and Chris will be leading this class. You'll get some pretty in-depth insight from them. So we'll be teaching you our core tactics, the ETFs we trade, how we trade them, that trade management process, including adjusting and resetting trades and maximizing position value. Take a moment. I think, Suzanne, you take care of putting the link in the chat box. If I haven't already, I see you did. Okay, good. Thank you. So here's what's included. This is pretty big package of things. So let me take a quick moment to walk through them. We have the live training session. You have 2 dates to choose from, June 29th at 7 p.m. or July 5th at noon. You can also attend both. So it's your choice. You can attend one, the other, or both. We'll also be holding a Q&A session on Wednesday, July 6th. The reason for that date is we intend to start the next 5K challenge process testing period on July 7th, Thursday, July 7th. We may delay it a day depending on market conditions, but that's why we want to get the training and the Q&A session in before we start the next group. So a Q&A session gives you a chance to go through the live training, write down any questions that you have, bring them back and get them answered before deciding whether or not you're going to take that step up to the 5K income challenge. It's not for everybody, but what we're teaching in here can be used by anyone. We also record everything, so you'll get the recordings of the training and the Q&A. We also provide you with the training slides, and we transcribe our training videos so that you can match the transcript to the training slide. So if you don't have time to watch the recording, you can go back and read an important part of the training. We also provide you with an options tactic cheat sheet. This is a printable desktop version. So any of the tactics that we're executing, you know the step-by-step process to execute it yourself. That's, again, to help you with the speed of execution on the trading side. We provide you with a 5K Challenge members review session inside of our program for 5K, the 5K Income Challenge. We meet with our members once a month, and we're looking at the performance. We're looking at what's happening in the market, what's driving our trades, what our expectations are in the weeks ahead. So we give you a chance to literally listen in on a recent members review session so you understand what it will be like. That's the one time per month that we have to get together with the 5K Income Challenge members. Right now, again, there are 25 people who are part of this. We'll be growing this slowly on a quarterly basis, but that members review session gives you a chance to see what it's like to be on the inside. The next item here is a complimentary 5K training retake ticket. So what that means is, as we keep running these live training sessions throughout the year, anytime you want to attend it again, you can do so at no extra cost. You don't have to pay the $295 or higher ever again. Again, within that first year. So it's a complimentary retake of the live training, even though you'll have access to all of these pieces on a member's website for as long as you want them. But if you want to sit in on the live training and or a live Q&A session again in the future, you can do so at no extra cost to you. So that's it. That is our 5K challenge. Over $100,000 produced so far in 7 months. Our current income on that $100,000 portfolio, the pace is 177. That'll change as weeks and months go by. But again, through two testing periods, we've achieved very good results. The current period is we need a better market. I'll be honest about that, but I think it's coming, and I think the next few weeks and the next quarter are going to be even better than this current quarter. So I'm excited about that for the people who are part of it. So again, the training, everything you need is included in our training class package. And the price is $295, 2 dates to choose from. Everything is recorded for you. And we'll be doing this again in October at a minimum. So let me take a quick second to back up to questions here. Everyone needs a bathroom break. Yep, Z, everybody always does. Can a 2K account have not, I apologize, I can't, Chalapathy, I think that's how I pronounce the name, not at a 2K. I mean, we traded a $3,500 account, but bear in mind, the best we could do is one contract per trade for the majority of the trades. And there were a large number of trades that in over time, you're limited in what you can do. The smaller the account size you get, the much more difficult it becomes to have tactics at your disposal, which you can use. Because we were keeping things simple, we were only trading a very small group of tickers, original workshop. We found that we could trade them at the $3,500 level. I don't recommend it. And not because it can't be done. Obviously, we showed you that it can, but there's a lot of stress on a trader if you're trying to grow your money faster. and it leads to mistakes oftentimes. You offer auto trading of this service? No, I apologize, we don't. Seems like your knowledge of the underlying asset needs to be a bit robust to be profitable. Would you agree? Yes and no, Reg. Yes, if you're trading an individual stock. Most of what we've been doing in the 5K Income Challenge has been limited to index funds and sector-based ETFs. So to a degree, yes, you need to know what you're trading. But if you can look at a chart in the first quarter and you see oil is basically the only asset class that's rising, then you trade oil and you trade it to the bullish side. If you see the indexes, whether it's the Russell, the NASDAQ, the Dow, or the S&P trading to the downside, you trade them bearish, even though you don't know every company, all 500 companies on the S&P 500. So it's a measured approach to knowing what the underlying asset is. It is something that we explain during the training class. That's why we do take you through the individual tickers and show you which of the ETFs we're trading, what they represent. So for example, what's the XLF, what's the XLE, what's the XLK, et cetera. How much trade adjustment is required on each trade? Good question, James. And I apologize for the wishy-washy answer, but it depends. It depends on the market. It depends on the individual trade. Generally speaking, we'll make one, maybe two adjustments per week. In the last few weeks, we've had to increase that to 3 to 4 because of the way that the market moved. And the last 2 weeks, I would argue, are abnormal or anomaly weeks. You do not normally see the S&P 500 go down 9% in a single week, which you did last week. So that required almost daily adjustments to a range of trades last week. Generally speaking, though, we were making one, maybe two adjustments in quieter periods in the S&P, in the markets. Last couple of weeks, again, anomaly trading. Let me see, how many trades do you have open at any one time? In the 5K Income Challenge, we're trading on average 5 positions, maximum 7 at any one time. And again, that's the concentration of capital in fewer positions that I was discussing. So it's easier to manage because you have fewer positions. We did find at one point when we were trading the $50,000 portfolio, we were running way too many positions. And when we scaled it back, we had far better results. That's that period between roughly November, December, January, and into February, where we realized we were making too many trades across too many different stocks or ETFs. And when we scaled it back, our results improved rapidly. How often do you make trade adjustments per day, per week? That was James's question, so we covered that. Why not skip all the training courses, et cetera, and just offer auto trading of the trades? Number one reason is for financial publishers like ourselves, for educators like ourselves, it's the risk of a system like that. I don't want that kind of risk in our business. You need to be able to make your own decisions about taking a trade or not taking a trade. Auto trading doesn't allow you to do that. We might tell you that we want to trade, I don't know, Walmart, and you don't like Walmart. Well, an auto trader, you wouldn't get that choice. But when you get a trade recommendation or a trade alert, you could say, I don't like Walmart, or I don't like the chart. I don't like the setup. I don't like the entry price, right? Auto trading removes way too many choices for you, control for you, that you absolutely need to have, in my opinion. Sorry, some people may love auto trading, but I think control of the, especially when you're talking about spreads, strikes, various strikes, various expirations, you need to have your hands on the controls. Is there a monthly, quarterly, annually? It's an annual fee after the training, which we share with you during the training program. We can reinvest the profits and bring the account to 5K. You can do that. It's just slow. Does 5K Challenge include a live trading room access? It does not, because of the speed at which we put out trade alerts. We don't do live trading in that particular program, in part because when we are putting out a trade alert, we need to get it in your hands immediately. And because of that, What we do, we actually don't use email. We don't use SMS. We built a trading app. All of your alerts come directly through the trading app. It's for iPhone. It's for Android. It looks like that on the screen. So you get your alerts. They're date sorted. So the most recent alert is always at the top. They're time stamped, so you know when the alert came out. And the explicit instructions are directly inside. So what kind of trade is it? What tactic are we using? What's the underlying, et cetera. Do you help with a 10K account? How much can you make weekly? 10K account, yes, we do. We have a different program called Small Account Trader Pro that is geared toward $10,000 to $50,000 accounts. The goal in those accounts, if at a $10,000 level, your goal should be somewhere between $500 and $700 per month. You're not going to get it every single month, but that's the goal. Set a goal and then set out to reach it or beat it. How often are position adjustments made per day, per week? Position adjustments are typically made once a day. We're not going to make multiple adjustments on a single position in a single day. We may make multiple adjustments during the course of the week, but on a single day, you're talking about one adjustment. That's one of the things when we talk about trade management in the training class, that is where we will go through that process. Do you trade the futures market? We're testing the futures market, but we are not trading the futures market right now. So we're still giving consideration to that. And I think I have 3 minutes left. So probably, am I doing okay, David? Still 3 minutes, 2 minutes on the clock?
Yeah, you got a few minutes left.
I'll take one more question if it's there. And if not, once again, Suzanne, thanks for helping me out. I'm putting the link in there for everybody. So again, that's everything that's included in the training class. And the training class is the prerequisite in front of the 5K income challenge. And again, we're getting pretty outstanding results. So could we make more than 5K monthly? That's possible. Again, bear in mind that, okay, brutal honesty, I don't know, because we've had such a crappy market for the last 6 months. I can't actually answer that question, Mahmoud. Could we make sure? I'd sure like to know. I'd like to have a little bit of stability in the S&P and in the underlying market, but I don't have that. So I'm working with what I've got here. And it's like I said, it's a full house of bears. So could we make it? Well, it's certainly possible. Right now, what we're trying to do is get that average up to 5K based on that $100,000 portfolio. And then as markets are rising, as volatility shifts or changes, that should give us a better sense of what the maximum potential might be. I can tell you that, Suzanne, can we get the link one more time, please? I can tell you that the original premise was 10K per week, but we didn't know what the portfolio size had to be. And so when we scaled everything down, we got down to this when we arrived at the $5,000 question example that I showed you in the timeline, and we realized we could do that on a $100,000 account. That stayed the genesis of our process here. So I have basic knowledge of options. Will this training benefit me? If you've traded spreads, or if you've traded credit or debit spreads, then I would say yes. If you have not stepped up to credit or debit spreads, we might be a little too far ahead of you, Saeed. If we have enough money to trade big size, make more than that, like $40,000 monthly, $400,000 monthly. When you can do that, congratulations. We're not there yet. Maybe one day. So single sideds and massive contract spreads are more likely for that. Okay, that is all the time that I have. David, thank you for having us on. I appreciate it, and we look forward to being a part